Welcome back to another episode of Property Talk with Monica. This channel I cover and discuss all things real estate related in New Zealand. Today, our guest is Laura from Lighthouse Financials.
Hi.
I'll let you introduce yourself, Laura.
Thank you. So I am a mortgage advisor at Lighthouse Financial. As a company, we're a full financial services offering. So we have a team of accountants, mortgage advisors, wealth and insurance advisors. So yeah,
cool.
Financial.
So today, I think everybody is feeling the pinch. Really high interest rate. A friend of mine who's also a mortgage broker, I remember distinctively, like 2.5 years ago, she said, the interest rate is gonna come down. 2.5 years later, it hasn't exactly. So for us landlords, we are feeling it.
Yeah.
So what's your advice for property investors and landlords in this really high interest rate environment?
Yeah. I think one of the most important things, and it does sound a bit cliche, is that you have to remember that this isn't going to be forever. A lot of people were of that same sentiment a couple of years ago that interest rates would start to come down sooner than they have. That is still the expectation. I think in sort of the next 6 to 9 months, people are expecting rates to come down. I guess property is intended to be a long-term hold. So yeah, interest rates are high and people are feeling the pinch, but probably one of the most important things is if you can hold on to your property and ride that storm, then do.
Yeah.
There's many ways that you can kind of restructure the lending that you've already got to make it more bearable, I guess.
Tell us, how do you restructure debt?
So I guess the main one for investors would be looking to put the lending on interest only. That will reduce your repayments.
Is it always possible though? Because sometimes banks say no.
It's there are a few kind of restrictions around that, so you have to keep in mind your LVR position. But generally speaking, it's always worth just trying. Banks don't charge you for applying for interest only, so give it a go, see if it's something that they will approve. If you do get that approved, then your repayments come down. It just bridges that gap between mortgage repayments and rental income, so you're not having to top up as much. That should really be, depending on your personal structure and position, maybe just a short-term fix. So a few banks will allow you to do interest only for 12 months with very little assessment. It's a streamline application process, so that would kind of alleviate things in the short term. Some investors do have interest only for the lifetime of the mortgage, just because their intention would be to sell the property and repay that way. Look at the kind of products that you already have. So a lot of people have offset or revolving credit facilities. Are they being used effectively? Are you sitting on a really high 8.5-9% interest rate for no reason? Could you restructure that and make the direct that cash elsewhere?
What was that? Why do people have a lot of revolving credits facilities sitting there? It's because they thought they were going to not really use that much that money, but they end up draw down that completely and then paying like floating rate.
So some people will have like a lump sum of money that they offset in a revolving credit. Some people use it as a day-to-day transactional account, so they'll have their rents paid into it and then they use it to pay their property costs, so rates, insurance. So for some people it can work really effectively, but I guess you have to be quite a disciplined investor and use it wisely, otherwise you're going to be paying sort of 9% interest just by going out doing your day-to-day spending on it, and there can be that temptation just to use that money for things that aren't going to benefit you long term.
Cool. So what about refinancing? Is it kind of an option for us to alleviate the pain a little bit?
Yes, definitely. We're seeing a lot of refinancing in the market at the moment. So refinancing, effectively moving the lending from one bank to another. Benefits of doing that, so you've got the dollar for dollar refinance exemption. So you can effectively just mirror the lending from one bank to another, and you can fall with outside of those LVR restrictions. So even if you're refinancing investment property and the LVR is over 70%, then that's fine under the dollar for dollar refinance. So Moving the lending to another bank gives you an opportunity to kind of reset the terms of the lending, apply for interest only, extend the terms back out, and all of those things are going to help bring your repayments down.
Roughly, what is a polite period of time to hold on to your lending before you refinance? Because obviously no one wants to keep refinancing it every 5 minutes.
No.
I mean, there are costs involved, and also, you know, there are other things to consider.
Well, most banks, when you refinance to another lender, they'll pay you the cash back for taking your business to them, and that normally comes with a 3-year clawback period.
Yeah.
So you shouldn't just be looking to refinance every 3 years just to get a few $1,000s cash back. But if it makes sense to move from one bank to another, then definitely worth exploring. And you know, as long as you fall outside that clawback period and your fixed rate interest terms, then there's not going to be many fees involved with doing that.
Yeah.